Quick review. I'm keeping this one short because I need to get to bed soon. Um, USDCAD. I'm in the USDCAD buy, as you can see. This has been a pattern I've been patiently waiting for a good amount of time. I'm losing connection, as you can see. Uh, so this is the trade really quickly on here. It's in profit. It hasn't really pushed the way I wanted to yet. This is the daily chart. This is the 4 hour chart. As you can see, this is a trend continuation, low hanging fruit entry after a huge impulsive move down, going to consolidation. And this is a long term play in terms of the pattern. This is essentially a dump and a pump back up. It's a larger time frame dump and pump, and I am catching it basically as it's coiling back inside to revert back to this mean from the beginning of the year. And again, just the pattern that I was really spotting is just that trend continuation, low hanging fruit after price pretty much you know dumped all the way down, and then we had an inside pump and dump pattern right here, and then we started trading back inside that 20 EMA. This is days worth of consolidation right here, and then price just based on structure, creating higher highs and higher lows on the smaller time frames, breaking structure, and just showing a strong indication that it's gonna trade back inside, which we are back inside this pattern. You call this a triple bottom, double bottom. Uh, there's so many different variations, but ultimately, what this price action showed me was it was ready to push back up. Also, coupling some of the fundamentals, the U.S. dollar is gaining some strength amidst all the political, geopolitical events that's going on. So just I'll show it on TradingView just to kind of get a little bit more clarification as to my reasons for entry. So as you can see, this thing's been in consolidation since the beginning of the year. After this impulsive move down to this quarter level right here. By the way, I use quarter levels to kind of just spot areas of support and resistance, and this was no different. So price bounced off this quarter level right here, and then subsequently went into a long time range, uh, and then as you can see, just started coiling up inside this 20 EMA, higher highs, higher low, higher high, higher low, and then we're breaking this level right here, which is we're breaking this resistance area right here, as you can see, and price also is breaking this quarter level at 1.3750, and we're targeting the beginning of the impulsive move back from mid-January. So that was my theory and my idea on this trade. I was able to find some entries right here in this area earlier in New York session this past Tuesday. It is currently 12:22 a.m. Wednesday night. We're well into Asian session, going into uh, uh, London session. So USD CAD is really a US session pair. So we're gonna see the bulk of the volume come in tomorrow morning during New York. Right now, I'm just doing a quick recap. As you can see, I'm in a trade. I'm being quite aggressive. I'm not gonna lie. This is the most aggressive trade I've taken in this account, and for good reasons. I really like the pattern. I am hawking this to make sure that I don't blow up this account. If for some reason this trade reverses back on me, I'm ready to take a max loss of half of this account. You know, this is a $5,000 account. I'm ready to take a $2,500 loss, $2,000 loss if I can help mitigate it. But yeah, this is where I'm at in this account. I'm going for it. You know, again, this is sort of uh, asymmetrical betting. Like my bet size is going to increase based on how good of a pattern I think I'm trading. It's not going to be static. But however, this is way outside of the normal max size that I should use on a trade because I'm using pretty much more than 50% of my account on this risk, as you guys can see. I'm risking damn near about $3,500. Although I'll be eyeing it, I won't actually let it hit that stop that much of a loss, and I'm targeting about 9K. So more or less, this is an account flip, which I don't want to call it that because the reason why I got into this trade was based on very specific rules, and I'm just really trying to take advantage of the hard work I've been putting in these last few weeks on USDCAD trading this pair. And this one is no different. I really like the pattern. I saw a good area of entry, a safe area of entry that didn't actually allow me to be in much of a drawdown when I got in. And I'm riding the wave. I'm looking for that aggressive push so I can get in a safe area and then limit my exposure. This is it. This is trading discretionary decisions. Based on sound rules, based on a lot of confluences that made sense to me and my way of seeing the charts. With that being said, I'll come back and do a part two once this pattern fully completes. I'm looking to take profits at this 88.6% of the Fibonacci level. If I drag it from this swing high to this swing low, and as you can see, the take profit level is at 88.6. That's where I usually shoot to take my targets. And again, this one is no different. I'm following my rules. Perhaps the only rule that I completely let go is the risk management, which is one of the most important parts of this game. But also one of the most important parts of this game is if you see a plus opportunity. In this case, this low hanging fruit trend continuation is more or less my B trade. But the way it's set up with all the fundamental drivers and the technicals that I see, I really classify this as an A plus trade, and I'm sticking to it and I'm watching it closely. I've set alerts, and I'm just managing it as closely as possible in case something goes wrong. Trying to limit my downside. That being said, I'll come back and do a part two. USD CAD buys, low hanging fruit, trend continuation trade. Let's let's hope for the best. Peace.